Welcome everyone. We're going to get right into the stock market charts, looking for trade ideas, using technical analysis to really put the probabilities in our favor. Nothing's guaranteed. You have to manage risk. Finding trade ideas and reading the charts is part of it, and using risk management, using effective risk reward ratio trades, so taking trades that have a higher probability of making a larger gain than taking a loss. That's key. And various components of that. So if you're new to these concepts, I put together a stock market technical analysis course. I leave a link in the description below. Check that out if you're interested. It's a $99 course for about 4 to 5 hours of training, and I go into various topics around risk management as well as chart analysis. Okay, guys. I want to start out today with IWM. This is the small caps. We have a breakout on IWM, and let me get rid of that trend line. This is your small caps. They've been trading pretty much sideways for really the entire year of 2021. And yesterday on the Fed meeting, we did get a breakout candle right there above the top of that range. The volume, I was checking out the volume. You can see right down here below. Good volume on that breakout, really increased volume. So volume is really a check for that breakout. We broke above the level. The only thing that we don't have is, or the only thing that we do have that really, would give you pause is this is a breakout on negative divergence. So it's a new high in price, but we have a lower high in momentum. However, the PPO and the RSI are both pointed up, but the RSI does look like it's about to start to turn down. So things to look for. Here's the RSI. You can see right there, just starting to kind of creep down, but it's not pointed down yet. So you don't have confirmed negative divergence. You just have negative divergence right now, but that could be burned through if this continues to go higher. So as of right now, this is a breakout. It occurred with good volume. And I think it's, I think it makes sense to trade this as a breakout to the long side until this breakout fails. So what I'd look for, if you're going to fail, back below 234.34 area, a break back below that is likely where you'd want to stop out at. And you want to get long on the breakout. So maybe we come back in for a back test. That'd be the objective area to go long. And then with a stop somewhat below, or go short, in my opinion, somewhat below. That's what I see on that one. Ultimately, we just have a breakout of a range. It should be impulsive because the thing is you've got this big sideways trading range. Everybody sees this breakout. So I'm looking for more bullish price action, and I'd like to see it impulsive because here's the thing. You've got a lot of people who are either short this big range, or there's people that are waiting to go long. Well, this breakout should cause the shorts to start to cover, and then anybody who was waiting for the breakout to go long should be piling in to go long. So there should be a lot of upward pressure. Today's price action isn't that reinforcing of that breakout, so you would want to see more buying come in. So something to watch for. But what I would just do is just take a long down here at support with a stop somewhere below. That's how I treat it. And if it holds and continues higher, you just trail your stops up. Otherwise, if you do get the false breakout and it breaks back below, that's where you'd want to stop out of a long position or maybe take a short position. Moving over to the triple Q is looking at the hourly chart. So we have a bearish rising wedge here. So far, they've ripped this to the upside right there. Boom. So that is, oftentimes these moves on bearish patterns to the upside are fake out moves. They'll just run a bunch of stops and then they'll crash this thing down. That's a possibility. Right now, when I look at the daily chart, triple Q's has pretty much gone parabolic. It's just moving straight up. And you can see it right there the last 2 days. So lots of short covering, lots of people buying in, lots of FOMO basically going on. Again, I'm not looking, I don't look to go long on parabolic moves. I don't chase moves. I don't look for, I don't want to buy high, essentially. I'm looking for moves to buy things low and sell them high, or shorting, I'm looking to sell high and cover them back low. This is breaking out to all-time new highs. There's no resistance overhead, so there's no real indication of a sell signal, no reason to be short, no reason to fight what's going on right here. So again, I'm not short, not looking for any reason to short it right now. But if that starts to show up, we'll take a position on the downside. If you're long, you could just ride it long. Getting pretty overbought on the RSI. You can see here on the daily, we are up around 77.87. The Qs really can get a little bit higher overbought. This area about 78.50 or so is really about the peak of where it gets before you get corrections. You can see when we get this overbought in the Qs, we were overbought there, and there's a correction. There's the start of a correction. Overbought in this area here, and we went up a little bit more, and then there was your COVID crash. Overbought right there. Let me circle that out. About as overbought right there, and there was your correction. Overbought in this area. Didn't really have a correction there, and we're right back in that area right here. So I would expect we're going to get a correction soon, but I don't have a sell signal. So in order to get that sell signal, I need to see a candle, some sort of a reversal candle, some sort of a break of a trend line. On the hourly chart, maybe we come in and break to the downside of this bearish rising wedge, break this chart right, this trend line support right here in the blue line. So those are all things that I'd be on the lookout for, but we don't have it right now, so no reason to be short right now. Negative divergence is still there. If I look at the PPO, you can see it's still there where we're making kind of an equal high in the PPO and an equal high in the RSI from the former high. We've got high right here. We're really setting in an equal high. So if these don't turn down soon and they continue higher, you're going to burn through the negative divergence. So that's usually pretty bullish when you see that happen. But if we start to turn down and we do get that correction or a reversal candle, then we're likely going to confirm the negative divergence and likely going to put in a correction. And as I pointed out again, just, every time you get this overbought in the RSI, there's been many corrections. I just pointed out multiple corrections in the past where they really started from levels of being overbought that are this high that we are right now. So things to watch for there. And really, here's the SPY. The SPY, because the mega cap tech stocks have just, they're starting to get so oversized that, they are definitely a big component of the S&P 500. I think the FANG stocks, Microsoft and, Apple and all those FANG stocks make up over 20% now of the SPY. I believe it's actually closer to maybe 30%. So, where Qs goes, oftentimes the SPY is going to go. And SPY's at all-time highs. No reason to short. Getting pretty overbought. We still have negative divergence, although it's not confirmed. Again, you want to see these start to point down to confirm that negative divergence. And once you have confirmed negative divergence, then you likely want to start looking for an opportunity to short. Just like we had bullish divergence down here at the lows, we have negative divergence at the highs. So this market has basically been go long when you have bullish divergence at the lows, short with negative divergence at the highs. We're at the highs right now. So things to look at right there. Let's move on. GNRC still looks like a good short. And you can see here, coming off the March 2020 lows, there's your uptrend line right there, clean and clear uptrend line. We broke trend right here. There's your sell signal or the break of the trend, and there's your counter trend bounce. I've seen this a lot over the last year. Every time you break a bullish trend, the dip buyers step in and you get a counter trend bounce. But looks like that's run its course. They popped it above support just briefly. But it's back below that resistance line now and starting to sell down, looking pretty weak, at least in the short term. So I would look for this to head lower, down to 386, about 385.50 as a level of support right there. A break of that, I think we're heading down to 340.30. So those are some levels to watch. We still have negative divergence. See it right there? Big negative divergence. It's confirmed. See how we're pointed down right there on the RSI and the PPO? Both are confirmed. So just another extension of the divergence, which means you made a new divergent high right here. Extend the negative divergence. Tells me we're likely going to get a correction to the downside. So it's not going to go straight down. We're going to hit support, kind of work our way lower. And that's how corrections work. They, especially after a long extended uptrend, they trap people in. So usually they kind of work their way lower and then they gap, make big swift moves to the downside and trap the long. So that's what I think what's going to happen. Okay, gold. So gold's still hanging in there. Bigger picture is just this uptrend, and that's really what I'm watching. You've got this uptrend coming off the 2018 area. Lots of tags of support. We're still above support. You can see we tagged it again right there back in August, and we're just kind of grinding higher. A sustainable bull market typically just grinds higher. Doesn't impulsively just rip to the upside. It just kind of grinds higher day in, day out. And oftentimes it can start out where nobody's paying attention. Something goes into a bull market. And then when everybody starts to take notice, they usually go parabolic. And oftentimes that's the end of the bull market. So gold continues to grind higher. GDX, again, this is the miners, up a little bit today. They were up more at the open. They sold into that open. Basically flat where we were at yesterday, but we bounced off that support zone. So again, the bigger picture is you've got this bullish falling wedge right here. Let me go ahead and mark that out. You've got this big bullish falling wedge right there, broke to the upside of the falling wedge, came in for a back test, held support, and we're higher. So whether we go sideways and up, to me it looks like we're going to continue to work our way higher over time and continue the next leg higher of what seems to be a bull market in gold and the gold miners. Looking at GDX, going back, looking at bigger picture, you're making higher lows. All right, there's COVID. That was a liquidation event, but you're making higher lows and higher highs. All right, so bigger picture is you've got this uptrend, something like that, and you're making higher lows and higher highs, and I think we're likely going to just continue that until I see a change in the technical posture on these. Looks like we're in the area of support. And again, most people, they don't want to buy at support. They want to buy things that are going straight up. That's when they want to buy it. And when things are going straight down as they fall into major support, they don't want to buy it. They want to buy it when after it's rallying way up here. That's when everybody gets enthusiastic and wants to buy. That's fine by me, but I like to buy things down here when they're in support. And, usually I'm selling them and taking profit when everyone else is trying to pile in. Okay, so that's the name of the game. Guys, that's all I have today. So leave me a thumbs up if you find some value in the content. And I will not be able to put out a video tomorrow. And I'm going on vacation for the next week. So I will be out of town. I'll try to get some videos out throughout the week, but no guarantees there. So take care, and I'll catch you on the next one.